Good afternoon, good evening, good morning, everybody, and welcome to ICC China Trade Finance Annual Survey 2020. I'm Xu Jing from Bank of China, and I'm very glad to co-host this panel with Mr. Vincent Aubron, the member of ICC Banking Commission Executive Committee. Thank you. We are so glad to have you here. And I believe that many of the participants have already known them in the past events in China. However, I wish that in the future we could have this meeting in person, and still we can co-host the meeting just like last year. And you see, so yeah, it's such great regret. And but I trust that this still will be a very exciting and valuable session. As always, with our distinguished panelists bringing us the latest updates of the trade finance industry. After the breakout of COVID-19 due to the lockdown and disruption of mails and cargos, digital solutions have become a major concern in trade finance. In the next 45 minutes, we'll have a panel called Digitalization of Trade Finance, the Reality, moderated by Vin. Vin, now over to you.
Thank you very much, John. I must say Louise's presentation was really excellent, and it really set the scene for what we're talking about here in this session, so I really appreciate it. It really gives us the backdrop, and actually you really helped me start this next session because you mentioned ICC so many times, and ICC, of course, is working with for as long as I can remember, and it's really exciting times to be working together. So to kick off our session with my panelists, and of course I have David Bishop, the Deputy Director from ICC Banking Commission. I have Joel Shreven, Solutions Director, China Systems Corporation. I have Lakshman Sankarnan, who is from Trade Assets, and Nizardine Kumardine, who is a member of the executive committee, again, of ICC Banking Commission. I'm going to kick off with David because it follows so naturally after what Louise has presented. So David, could you give us a snapshot of the main initiatives and the current initiatives that the ICC, but in particularly the Banking Commission, is working on in terms of digitalization of trade? David.
Yeah, thank you very much, and welcome everybody. I'm here live out of Paris, unfortunately not on the ground in China. Would have loved to, but I think with Zoom everything is possible nowadays. And I think that's also one of the main point of my presentation. I would always say we have launched a working group on digitalization on trade finance in 2017. We were primarily looking at our own rules, the ICC rules for trade finance, the UCP and the like, and we're slowly thinking about how we could draw the future and how we could see the future. 6 months ago, when the whole COVID crisis started, I think we really had to almost change all our focus from a series of work groups and work efforts to primarily tackle the COVID crisis. And so we do a yearly documentary credit practice and trade finance practice, and almost 54% of them, they told us that they have implemented rapid digitalization measures to really accelerate digitalization in trade finance. Let me focus a bit more on the work group and what we did over the past couple of years. I think there's quite a lot of outdated laws in various constituencies that need to be updated, and that's also something that the COVID crisis showed quite a lot, that to enable trading on pure digital, let's say, documents, electronic records. It's not only the banking and the trade finance industry alone, it's really primarily also a legal issue. And that's why we have, with this roadmap, we have a document that shows us a clear path, how we can revise laws, how we can also update our own practices at the banking industry, and so on. In 2017, we really mapped out what's the need kind of to update and revise these rules to enable the use of electronic records in a trade finance transaction. One is the EUCP and the other one is the EURC for collection. So both set of rules, they're not complete new rules, but they're more annexed to the existing rules, but they really are absolutely crucial to enable the digital trade, I would say. But nevertheless, in addition to that, we were also starting to draft a complete new set of rules, which is the Uniform Rules for Digital Trade Transaction, which really in the future should help us to be the baseline for all what's called digital trade. It's kind of a high-level framework for rules and obligations covering the use of electronic records to process digital trade transactions. We have a work stream that looks at how banks and fintech can work together much closely. It's always very painful for a large bank to kind of work together with a fintech solution. Or painful, it's maybe just there's a lot of legal work, there's a lot of process to consider. And
I'm just picking up on that point, David, regarding this pain and the working together aspect of it. Could you give us some information or maybe some insights on the DSI, the Digital Standards Initiative? Because maybe this is kind of going to be focused on that issue of how the parties can interact together, develop standards, and everyone is so interested in hearing more about the DSI.
Yeah, absolutely. I'm more than happy. And DSI, that's really, I would say, one of our flagship projects, or even one of our most important initiatives for the past couple of years. DSI stands for Digital Trade Standards Initiative, and we have just launched the initiative officially, formally in September, but we were already preparing for it for quite some time. And basically, I would say DSI really will help to accelerate digitalization of trade through the development of open digital trade standards. The next step, we will work on industry-specific standards. We will primarily focus at the beginning of standards for electronic bills of lading, for instance. But then we also work a lot on cross-industry standards. Here we focus a lot on the legal identity identifiers, which is a huge topic that we work together with the Global Legal Identity Identifier, with the GLIF organization. Yeah. We will really work together also with our national committees around the world, and also looking at ICC China here to really look at the legal harmonization, legal reforms where needed. And we definitely see around the world there's a need to focus. We have just appointed the managing director in Singapore, Oswald Kaiser, who will be glad to talk to all of you, and he's the one leading this initiative.
Wonderful, David. So much information in such a short period of time, and you kind of set the scene as well for our next speakers, because our next speaker is already an expert in automation of trade documentation and trade finance products. So really, really, thank you very much. I'm sure we may come back with a question when we go through all our participants. Joel Shrevens, and Joel is the Solution China Systems. So Joel, here we are at the ICC China annual event, and I'm looking at you on the screen here, and you are China Systems, but to be quite frank, you don't look very Chinese to me. So what is the connection? Can you elaborate?
Well, thanks first of all, Vin, for having me. I'm not sure, is it that obvious? But yes, you're right. I'm not Chinese. China Systems was founded, in fact, by a Chinese family more than 35 years ago, actually. And meanwhile, the company's expanded to become one of the leading global trade finance system providers. But maybe because it's early morning, Vin, to me, but when I look at you, you start looking more Chinese to me every day, every time I see you.
Okay, thank you, Joel. I agree. I'm turning more and more Chinese, and I take that as a great compliment. But now down to business, and dare I say, getting serious. As we have seen, there are so many digitalization initiatives going on in all corners of the world, with with big promises. And as you have been into fintech, if I may say fintech, financial technology for trade, for more than a quarter of a century now, what do you, as a practitioner, make of all this here, there, and everywhere digitalization?
Yes, here, there, and everywhere. I think it's correct, but in a competitive market, I think it's a very normal reaction. I think that each part of the trade industry that they aim to digitalize and improve their own process and data. However, in my opinion, if people want to talk about true and especially customer-centric digitalization, then you should avoid silo-based patchwork. Okay. The focus on trade, in my opinion, needs to be on a number of synergies. Synergies between the world of buyers and suppliers, which means we need to look at their purchase to pay and order to cash processes. And as a result, immediate result, we need to look at e-invoicing. E-invoicing and trade have been running on different sets of rails for a long time, and that's for historical reasons. But I'm convinced that those will be coming together. It is not a coincidence that, for example, the PEPL, which e-invoicing framework, which was originally a European framework, is being adopted more and more in an increasing number of digital trade agreements between governments of different countries. With Singapore, Australia, in Asia, we're seeing it being adopted. So that's a synergy that we're looking at, electronic invoicing and trade. Trade contains invoices. The second synergy is the world of two very associated services to the trade process, and that's trade and supply chain finance, obviously, as a financial service, and shipping, logistics as a logistical service. So we need to look at synergies in those two worlds. And the third one is probably from a trade finance vendor's point of view, an important synergy. We need to look at a coherent data strategy across all the trade instruments. And the three at a high level, obvious ones are letters of credit, collections, and open account-based trade. So we need to look at synergy in those. And I have to say, and his name has been dropped several times, I've been listening to Oswald, and I've been speaking to Oswald from the ICC DSI initiative. And I have to say, I'm quite optimistic that he's taking the industry approach that is needed, because trade is not going to benefit from a platform or ecosystem, or especially a closed ecosystem approach. If I do an LC on the SWIFT network, from an applicant to an issuing bank, from an issuing bank to an advising bank, potentially with the involvement of an advised through bank, and the ultimate beneficiary, I can push that through in 15 minutes or less on a SWIFT network with an MT700, even faster if I would use a transaction template. But the reality is, it's not the data exchanges that are problematic or the challenge. The loss of time is mainly on the procedures where the decisions get taken. It's those things that take time. And in fact, the real elephant in the room on trade are the documents. And the legal aspects around moving from physical documents to digital documents. And DLT itself as a technology is not solving that. So I think there is a risk that if people are getting ahead of themselves, that we may see an increasing number of digital islands being developed. And digital islands may sound like a nice holiday destination. They're not the best places to conduct global trade business. Like I said, documents are the glue of international trade. Fix the glue, that will be the catalyst for true digital trade.
Well, Joel, that's true, and the story regarding the issuance of the LC using current technology is really impressive. But listen, come on, that is only half the story. That is only the import or issuance side, the easy part. But what about the export side? Where do we look for the solution on the export side, which is so much more complicated?
As an obvious statement that I can make is you have to focus on the exporter's requirement first. Focus on the requirement, then focus on the technology, not the other way around.
Okay, well, looking at the customer sounds good, but what do you really mean by way of example, maybe?
Yeah, okay, so I'll illustrate it. if you look at trade, and I think I've mentioned it before, all trade transactions, they start the same way. Buyer wants to acquire some goods, and that results in a formal quotation, a pro forma invoice, ultimately a purchase order, and that ultimately results in some kind of contract, correct?
Right. Okay.
Okay. So following that thought, yeah. Whether those agreements, they're a result, and whether they will be settled on an open account basis or a collection basis or an LC basis, they all share that same source. And perhaps because it's a lot of theory, can I quickly, can everyone see that slide? I've got a slide which illustrates. So what I've tried, this is what I call a customer-centric view on trade. I'm not going to go through every single arrow and every single box here, but you can see the golden boxes, the purchase orders and the invoices. Ultimately, all types of trade settlement methods, and the red ones, which is the LC. The teal or the greenish color is the collections, and at the bottom you have got the dark gray one, the open account. If you look at it, purchase orders are being flipped into invoices. Invoices are also the basis, provide the key data source for shipping instructions and SLI, shipper's letters instruction, whether that leads to an e-airway bill or an EBL. That shipping instruction is very similar. Also, certificates of origin, you will see that invoice flows through customs, it flows everywhere. And I've not put factoring on here, I've not put supply chain finance on here, but what I'm saying is, you see the light blue boxes where I flip. Flip means map data from this source into another source. So purchase orders being flipped into invoices, invoices being flipped into collection instructions, invoices being flipped into payment instructions. The whole world of trade can be reconciled automatically if you respect data inheritance rules. Yeah, and this is how trade ultimately. This is sort of the target. It's not utopia. From a technology point of view, it's perfectly possible. This is a world of payables and receivables hooked into a world of services, logistical services, insurance services, whereby we maximize the reuse of the data. So I think maybe so if I go back to what I was explaining, ordering, invoicing, paying. That is what all trade transactions have in common. Now that you've seen the slide, Vin, would you agree that the two key documents in any type of trade transaction are, in fact, and they're generated by buyers, suppliers, are the purchase order and the invoice? Would you agree with that, Vin?
Yeah, no, I would agree. Purchase order and invoice, they're the key. They're the base.
Yeah, so what would you call that?
I guess I would call that it is what most people would call it. It's the contract.
Yeah, it is the contract, but I think you've probably already seen it on the slide itself. I call it trade's golden record, and golden record. It's probably maybe I don't want to sound like a marketing person, but it's really the golden record of trade. The reality is if you look at a trade transaction, if you take a Swift, an MT700 LC. And it has done a good job, but the reality is, apart from the purely financial information, currencies, amounts, dates, there is no real structured data inside a Swift message. It's got tag 45A goods description, tag 46A documents required, and 47A additional, but it's all unstructured. There is no use of HS codes. The people who work in the trade business, the harmonized codes, HS codes, or seaport codes, airport codes, they're not being used. And that is what I mean between bridging the world of logistics, the physical supply chain, and the financial supply chain. Digital trade implies that traders, shippers, and the financiers speak a common language.
Okay, Joel, I'm a slow learner, as everybody knows, but I think I'm beginning to see it. The purchase order, which you mentioned already, has most of the data that you need for trade banking for your golden record. So purchase order has buyer, importer name and address, seller, exporter name and address, amount, currency, good description, Incoterm, transport, and routing. Okay, I'm beginning to see it.
Yep. It's taking you a while, Vin, but you're getting there.
And if you flip that core data, as you've explained, you have almost everything for picking the easy one, the LC, applicant, importer name and address, beneficiary name and address, goods description, Incoterm, etc. Okay, I'm getting it.
Yeah.
Can it be that simple though, Joel, really?
Well, of course, if it were that simple, like I said, we're a very close Swift partner. The Swift method has done, and is still doing a tremendous job. In the absence of anything really fundamental changing it, it is still doing the job today. And if it were that simple, obviously it would have been done already. But that's what technology is there for, enabling us to what we do today, the business we do today, often manually, do it better. But like I said, I like to focus that we need really a coherent data strategy, and we need a set of standards across all types of trade, whether it's open account, whether it's LC, or whether it's collections.
Okay, a good answer. Technology enabling us, if I get you right, to do what we already do, but do it better. But in your example above, you did not, sorry to go back again, you did not get into the complex area. It's a complex area of documents required. Documents issued by so many different counterparties, transport, insurance, chambers of commerce, etc. This is the tricky part.
Yeah. It is indeed a tricky part, but it's not that complicated. You don't need to make it complex. If I take an example, it will be easier. Okay. If you take a trade agreement based on a CIP Incoterm with shipment by air, what are the export documents that you require?
Well, you picked a simple one, but it's a good example. I guess invoice, CIP, insurance, airway bill. That would do it.
Yes, absolutely. No need to guess. That's it. All the other documents can be kept outside of the trade messaging and the trade transaction. In today's world, a lot of those documents are already sent electronically. But the key thing is that those document types and the specific requirements, they should also be coded into the trade instrument as structured pieces of data, not defined as free text description as it is today. Free text should be the exception, not the rule.
Okay, I'm just watching the time, Joel, and that was another very good answer. So for me to summarize, you maintain, for example, an LC, for LC, on the issuance side, the technology is already advanced and the connectivity is already there across the whole planet. You gave an example, issue an LC in a few minutes around the world. But on the export side, we all agree is much more complicated. So what can I ask you, just to finish up so we get on to my next speaker, what are your final words of wisdom from Joel on China Systems, especially as we are here with ICC China?
Well, I'm being Belgian. I'm very humble, Vin, and if you want to call it my words of wisdom, thanks for that. I'll give it a shot anyway. So, a couple of key things. So something I've said before. Number one, start with understanding your customer's requirements, and take an industry approach. Look at things from a customer's perspective. You need to help him reconcile his own activities, which is ordering, delivering, producing, shipping, transporting goods. So helping him to reconcile his own business with what happens on the financial supply chain side. That's, I think, especially from a financial service provider point of view, it's one of our key jobs. Number two, we have to evolve technology, but again, for the right reasons. We do not have to push technology or rules, for that matter, on a customer unless they really fundamentally solve a problem. Otherwise, he's going to get more confused. To shift your business from one platform to the other, it has operational consequences on your business model, etc. So if you do it for the right reasons, not just for a shift of technology. And number three, probably my favorite, my pet topic, we have to, of course, innovate. And technology can drive that innovation. But as I've said before, trade is not really, the fundamentals of trade have not changed for thousands of years. Contract, shipping, managing the risk, and handling the payment. And it will not change. But the reality is, with the technology, we've only started scratching the surface, actually, in terms of fully using the power of the internet, especially in trade. And it's going to take time. But something I know for sure is that the pace of change is going to increase. And to be resilient, the business of today, they actually need to be built as if they would be as if companies would almost be in a permanent lockdown. And I'm quoting Chris Skinner here, in fact. It sounds a bit, perhaps, it's got bad connotations, of course, but this is the reason why companies that are born on the internet, like the Alibabas, the Amazons, the Tencents, they are thriving in the current digital world. Yeah, like I said, it may sound strange, but the truly digital businesses are based on that concept, supporting end-to-end data flows without boundaries, device to device, using your mobile, interacting with your car, your home, your refrigerator, your microwave. Now, the microwave may not mean a lot in the internet context, but in the trade context, it could be use of smart containers, use of smart shelves and bins, so that can be used to track inventory in warehouses. Traceability and transparency in trade are absolutely essential for global supply chains and trade, and it applies not only to products and materials, and that has led to the introduction of RFIDs and IoT sensors, but that transparency is also required for the devices and even more for the parties involved in a trade transaction. Portable digital identity, meaning portable across platform, is absolutely crucial for legal entities, and it will facilitate KYC, onboarding processes, and what we ultimately need in trade, trusted interaction between man and machine. That's why we're supporting also the initiative with the legal entity identifiers, which also SWIFT has already introduced in payments, but that is going to be introduced in a wider context. We need to ensure that trade remains a safe business and a business we can invest in. We're also heavily involved with China Systems in initiatives around not just portable digital identity, but portability of digital documents, which means documents can be exchanged between platforms without the participants to a trade document flow having to be onboarded onto platform A or platform B or platform C. There are too many. Trade has too many participants globally. It's too complex to actually think one platform is going to solve it. Portability of trade documentation is key. It is important that this technology, that's the last thing I'm going to say, this technology needs to become mainstream so that we can facilitate the expansion of global trade, and especially, and that's my last message, ensuring that we do not reinforce a digital divide and the challenge that comes with that of the unbanked people, the millions, but global trade digitalization needs to promote financial inclusion. And I'll end with that.
So Joel, you mentioned Alibaba and Tencent, and then you mentioned your river. But where would you position Alibaba and Tencent? Now, this is the final point, so make it quick, please, because I'm over time. Where would you position Alibaba and Tencent in this river that you mentioned?
If you know their business model, then I would say they sit at the source of that river.
Okay, well, Joel Strevens from China Systems, I'm beginning to think you are actually turning more Chinese at this point in time. Thank you very much for a wonderful presentation, so practical, so engaging. It's Mr. Lakshanan Sankarnan, founder and chairman and CEO of Trade Assets. But my dear friend Lakshman, it's interesting that you are CEO of a fintech, Trade Assets, but your lifelong experience in the trade finance is in trade finance banking, but not only trade finance banking. For many years, you were chair of ICC Banking Commission United Arab Emirates, and for a number of years you were a very dynamic chair of the ICC Regional Banking Commission MENA, Middle East and North Africa, if I'm not mistaken.
That's right, Vin. I'm a trade finance man and an ICC man for sure. Thanks for the nice intro, by the way.
You're welcome. And now you run a trade technology company, but as I understand it, you are not a trade technology company like we just heard China Systems and Joel, but trade assets facilitates trade asset distribution using advanced technology and also, I dare say, including blockchain. Yeah?
Yes, sir. China Systems are the leaders in trade processing, and that's a very important side of the trade ecosystem. We trade assets are on the other important side, that is trade risk distribution. And banks have limits for trade risk assets, and naturally limits are limited.
Yes, indeed, Lakshman. Limits are limited, especially now, and that means trade finance availability is limited and restricted. Now, if I make reference, in last year's ICC Global Trade Finance Survey, the trade finance gap was estimated to be 1.6 trillion US dollars, but with the impact of now COVID-19, this figure may well be more than 5 trillion. So, getting to your company, trade assets, you maintain that the trade assets can narrow or greatly reduce the trade finance gap, and in doing so, increase the availability of trade finance. But come on, can you explain how? How can trade assets help close the trade finance gap and create more urgently needed trade finance? Lakshman.
Good question, Vin. The trade asset distribution process has for many years been a manual process using fax, phone, Excel spreadsheets, and data without any structure. That is non-structured data. This means it was not efficient and deals took days to finalize. This also meant that there was a blockage in the process for investors who wanted to invest in the short-term trade finance assets. This has also limited the availability of trade finance, especially for emerging and poorer markets, where SME companies are starving for trade finance.
Okay, I agree the existing process is old-fashioned and not efficient, and there is a blockage in the availability of trade finance, but you still have not told me how trade assets, your company, can solve this problem. How?
Okay, let me explain. The trade assets has created an ecosystem or an environment, or you call it a platform, which now fully automates and connects the players active in trade asset distribution. And those players who wish to be active and invest in the attractive proposition that is trade asset distribution. This means transactions can now, for the first time, be posted and executed in real time. Every step, every process is time-stamped with audit trail in a very secure, authenticated environment, which is some amount of blockchain technology. To echo the words used by my friend Joel of China Systems, trade assets empowers banks and investors do what they already have been doing out there, but in a much more effective and efficient manner. For example, trade assets executed a deal yesterday for $8 million that would have taken 2 or 3 days to finalize in the normal course. But on trade assets platform, it was done in just 3 clicks.
3 clicks? Wow, 3 days. Sorry, Lakshman, but just 3 days to create 3 clicks sounds wonderful. Okay, you convinced me on the increase in efficiency, but your main point was the trade assets, your company can narrow the trade finance gap, and in doing so provide more trade finance, especially where it's needed in emerging markets. Please excuse me, but I don't think you answered that part of the question. How can trade assets company reduce the trade finance gap?
Vin, as I said at the start of this session, limits for banks and countries are limited. So, Vin, by bringing the efficiency, which you already agreed with, this means that limits for trade, which is short term, businesses can be freed up and they can revolve. They can revolve many times and they can become available in a much shorter frame of time. Does that make sense, Vin?
Yes, Lakshman, now I'm with you. That makes perfect sense. Yeah, I'm with you. Okay, proceed. Yep.
Yeah. The next key point is that by creating a new ecosystem for trade asset distribution, it means that new investors in trade assets can bring in new funds and gain access to a market that could not connect with them in the past. A little bit more.
Yeah, Lakshman. Yeah, now I see it. In a way, you are disrupting the existing paper-based manual process. Would that sum it up in simple words?
That's exactly correct.
Now I understand the technology. Maybe just because we're running out of time, could you give us one good practical example of the application of trade assets technology? One good example.
Sure. Vin, can you tell me the country that issues more commercial LCs than any other country?
Yes, I can. I was going to say it must be China. Everybody says it must be China, but actually I believe for import LCs it's Bangladesh at the moment, and growing.
Exactly. Correct. As usual, Vin, you have always all the right answers and right questions too. Banks in Bangladesh need confirmation of import LCs. Yeah.
Okay.
So they also need cost-effective trade finance, given the higher interest rates in the local Bangladesh market. So trade assets enables the issuing banks in Bangladesh access confirmation from an array of banks, which are on our trade assets platform. So there can be primary or secondary market trade distribution, and all done in a matter of minutes once the banks are onboarded.
Okay, well, that's a good example, but how is the Bangladesh market going for you? You know, how many banks, if you don't mind me asking, have you managed to get onboarded in Bangladesh? I hope that question's okay, actually.
Sure, yeah. Bangladesh is going great for us. It's a very significant market for us. We have, at the last count, 35 banks active on trade assets platform in Bangladesh. We hope to have all of them soon, which is adding another 20 banks. This also means that the banks are members of what I call the trade assets club. So we have links into the trade banks at the highest levels in the country, in Bangladesh.
Okay, Bangladesh going good, but what about other markets?
Other markets, we are moving fast across all continents. Our initial focus was on the subcontinent GCC corridor. We are now moving into Asia, Africa, and other, as we speak, into Europe. And to echo your own words from your opening presentation on trends in trade, we also see the China-Africa trade corridor with a huge potential, and this China-Africa trade ready to make the jump into the advanced technology of trade assets. We are working on a very important initiative on this front. 10 years ago, if you remember, Africa was lagging behind slightly behind the world in use of advanced technology. But now Africa, with its very young population, the uptake is huge, especially of technology and devices from China. China Systems is the dominant trade asset system provider in the continent of Africa. I understand that. But trade assets also will be a dominant trade assets distribution platform for China-Africa trade, hopefully.
Okay, I am wonderful. I think that's really wonderful. I'm over time here, so I'm going to just wrap this up. And I've no doubt that trade assets and China Systems will continue your journey of success. And right now, continuing with trade and technology in the Middle East. I'm going to turn to our final speaker. And our final speaker is Mr. Nizzardine Qamardeen, member of the Executive Committee of the ICC Banking Commission. And Nizar is also Vice Chair of the Banking Commission of the United Arab Emirates. So, Nizzardine, time is short, but short is good. Nizzardine, I remember... Short is always good. Okay, that's because I'm short. Okay. Nizzardine, I remember you presented a blockchain project at the ICC Banking Commission meeting in Jakarta, a project from the UAE involving blockchain for goods inspection in Islamic letters of credit. I'll never forget it, okay? But that time you were halfway through the project, but can you tell me, did it turn out to be a success when you were applying the blockchain to an existing process?
Thank you, Vin. That depends on how you define success. It is a small world, really. As the financial technology provider for that particular project was also China Systems. I don't know, there is more relevance to China Systems, lot about China, okay? So Chinese are happy as well. Okay, we were replacing a paper-based process for goods inspection certificates with an automated system where certificate results were uploaded onto a blockchain. So that was the process that we were looking at. Okay. So it was
successful. But just because of time, and I'm sorry that I'm cutting you short, but was the project a success, application of blockchain?
Yes, the technology worked very well. We learned a lot about blockchain implementation. However, to be honest, benefit of using blockchain as opposed to other technology was marginal. Yeah, I'm a great supporter of blockchain or DLT technology, but the value proposition of blockchain depends on the business problem, and it is expected to resolve.
Okay, very good, Nizzardine. That brings me to the UAE Guarantee and Standby Facilitation Project, which I understand you, Nizzardine, are leading in the United Arab Emirates. Does this have a blockchain component or blockchain or DLT component?
Okay, you have studied a lot about my projects. Okay, thank you very much. Okay, Vin, there are three components to the UAE Guarantee and Standby Facilitation Project. One is streamlining wording of guarantees. In my opinion, the biggest problem with guarantees globally is the wording of guarantees. Yeah, you will agree with that. The second component is facilitate the release of capital into the financial system. Open-ended guarantees means capital gets tied up, and this is a challenge in the Middle East, but not only in the Middle East, I think all over the place. The third component is using advanced technology for the straight-through processing of issuance of guarantee and standby in UAE. This project will have a blockchain channel, but that will be parallel with the technology channels already existing and operating in the UAE. So if blockchain or DLT brings the promised value added, it will be implemented. My own personal opinion is that guarantee and standby are suitable to blockchain, but not really to commercial LCs at this point of time. Yeah.
Yeah. Well, if you don't mind me asking, why do you say standbys, for example, are suitable for blockchain technology, but commercial letters of credit are not suitable for blockchain? I don't see the connection.
You put me in a good question, Wayne. Yeah, standby LC is a single instrument, and most expire without presentation. And if there is a presentation, it is just a demand or a claim. Yeah, as Joel highlighted earlier, commercial LCs involve so many documents, parties, different standards, and different. It's in different jurisdictions as well.
Okay, now I get it. That makes sense. And I have read a lot. I know a lot about you, Nizar. I have read a lot of your articles in Documentary Credit with DCW, and you are known in the Middle East as the guru of Islamic trade finance, the guru. However, something puzzles me, and that is that you are very often promoting the use of standby letters of credit as opposed to demand guarantees. And I would have thought, with my little experience, I would have thought that in the past guarantees would have been more aligned to Islamic trade finance. So basically, why do you promote standbys at every opportunity? Why do you promote standbys so much?
Many questions. Okay, we are all students in this life, and you mentioned that I am a guru, but to be honest, I'm not a guru. I am a student, perhaps a good student, but still learning. Okay, you are correct to say that in the past, guarantees may have been more aligned to Islamic trade finance, but surely we are looking to the future and making improvements to the process. I have learned over the years that the traditional wording used in guarantees tends to be complicated, long-winded, and legalistic. From my experience, the wording of standby letters tends to be more clear and direct. Okay, the concept of standby letters of credit is also more aligned with smart contracts. So that is another good reason we could move forward.
Okay, I'm only going to be one more minute.
I think you agree with what I said, yeah?
Yeah, so Nizzardine, I do. For the digital world, you believe standbys are preferable to guarantees, yeah?
Yep. And then also I liked what Joel said. Joel said, the financial aspect has to be linked with the logistic aspect. So that's really Islamic, where you will deal with the finance and the goods as well.
Okay.
I like that.
Okay.
Yeah.
Wonderful. You are very convincing, Nizardine. So getting back to just wrap it up, the practical issue. I believe that the ICC Annual Banking Commission, I just mentioned it earlier, set for Dubai during the week commencing 22 March, was recently postponed. Maybe you can give a little bit of additional information on what the plans are for the next meeting.
Yes, our friend here, Mr. David Bishop, had the unfortunate job of announcing the postponement of Dubai meeting. The good news is that Dubai meeting will take place in March 2022 to coincide with the grand finale of UAE Expo. At ICC UAE, we are looking forward greatly to welcome all our Chinese and other friends across the globe, across the world, physically to Dubai in March 2021. Not virtually, 21, yeah, not virtually, physically. We want to see all our friends in Dubai.
Okay. Well, thank you,
Inshallah. Inshallah means God willing. Yes.
God willing. Thank you, Nizar. Your blockchain project on Islamic trade finance was most interesting, and your automation of guarantees and standbys in USD very, very promising. And we look forward to learning more from all of you. So my great panelists, David, Joel, Lachman, Nizardine, thank you very much. It was really a good panel. I went a little bit over time. I hope you can excuse us. So John, back to you.
Thank you so much. Thank you very much for all our panelists for your excellent speeches and enlightening thoughts, views, suggestions, which are very helpful to the audience during these difficult times of the COVID-19 period, when we are unable to travel or move around freely as before. The ongoing efforts by all of you, I extremely appreciate it, especially in facilitating global trade and the finance, especially in regards of the digitalization. And it's very encouraging and bringing us good hope going forward. And we wish that we will meet soon in the future. And thank you again, and wish you all stay safe. Thank you very much.
Thank you very much. Thank you.